Welcome. This is the Waves of Profit Hangout. I'm Scott Patton. We're going to be talking with Alan, the programmer of Waves of Profit, and we've got Blake, our brand new student, on with us, and he'll be asking all the questions, hopefully, that you've got to ask. And with that, I'm going to turn it over to Alan. We're going to take a look at his screen and walk through the program. And this is all about stock options and how to find the right call and the right put.
Sure. Thanks, Scott. Today was actually a really fantastic day in the market, and that's going to surprise a few people because if you look up this day of the recording, you're going to say, "Well, wasn't that?" And I got it on the screen here, a rather downward day, and it's like, "Yep." And I made money today. It was probably one of those really easy fishing ways to make money. I'll have to say is that if all you ever did was trade for maybe half an hour, 5 days of the month, so we're talking about 2.5 hours out of your month, you can make quite a lot of money. And because today's it's just days like this are great, and there's great days where everything's going up and it's green and you just can't hardly go wrong if you just follow the rules that we actually give you. So as Scott mentioned, Blake, you've got very little experience, but you're learning fast. So what I'm going to do is I'm just going to quickly cover like a couple of things in case people don't know anything, and I'll make it fast. So stock options are a really fast way to make money. If you don't know what you're doing or you don't follow the rules, it's the opposite. It's also true. So this is why we make it as simple as we can, and we just tell you, listen, just go with this and don't go with greed. And people get pretty excited because of all the other stuff that people make promises on and don't deliver. Here, we not only deliver it, but we let you try it out so you can prove it to yourself. And that's what the replay program is. There's the live edition, which you'd go into the markets and it would be the same environment as the practice environment. The difference is, in the practice environment, you come to this window here and you say, well, you know what, I heard that September, and you can scroll back 5 years of some year was really great and I'd like to trade it, or here, December, whatever that is, December 3rd, and you say, well, that's a great day. We actually guide you through these things so that you're learning key points about the market. So anyways, we'll just get going here, but this is how it works, is that you get to pick a practice day, and we've got over, I don't know, 1,000 of them, and you just say, well, I want to go, and we've loaded this day already. So here is the whole day. These little blotches on the chart are called candles, each of these rectangles, and it basically tells you where the prices were during the, in this case, 5 minutes that each of these candles represents. So in 5 minutes, the price, in this case, you can see this little yellow legend that tells you what the details of the prices are, where the prices were in that 5 minutes, and you can see in this first part of the day, you had a huge movement. And you go, why? How do you make money there? And it's like, well, I made money there today, and you can make some really great money at different times of the day. So I'm going to put the time on along the bottom so you get an idea of what's going on here. So this was 9:30, that's when the market's open, till 10, and then 10 to 11, and all the way up until closing, which is 4 p.m. New York time. And so, like, again, every one of these is 5 minutes. So you can see that, there was some activity here at some parts of the day, and some other parts were kind of flat and not much happened. So that's the basics of the market, is that there's great times to trade, and there's better days than others to trade, and the rest of the time you just want to stay out. So what we're going to do is I'm going to just show you what you don't want to do, and there's a reason for that, is we have here a list of stocks. Now there are about 8,000 stocks in the stock market in the U.S. exchanges. What this system does is it breaks it down for you into, in this case, about 40 stocks that you can actually get in and out of in, like, 10 minutes and less. that have good options, and options are the high-speed way to make money in the stock market. So it's doing all that stuff for you, and you go, great, I can trade any of these, in this case, 28 stocks on this day, but it actually breaks it down to even fewer stocks to say, you know, of those, I think you should go in the red direction, meaning that the stock's going down and you make money on the way down. On any of these should be pretty good. And it tells you that at the beginning of the day. So here we go. This is the beginning of the day. And it's like, well, any of these should be pretty good. So what I'm going to do is I'm just going to mark them as hot stocks. We're just going to review them. And there's one green one in there. And the idea is simply this, is if this stock that's marked red goes in the red direction, and I'll explain what that is, then it's probably a good way to make money. You got a little bit of filtering you have to do, but it's about that simple. So I'm going to move forward here to the end of the day, and we're only going to look at the hot stocks. Now, there's more that got added as the day got better in the red direction. So how did the EOG turn out? Well, remember the thing said, if there's a nice red move, and so here it was, there's a nice red move, and there was another little one here, and there was one in the very beginning of the day, you can ride that, and it's a better move in a probable statistical way than a green move will be. So here's a green one, and there's a red one. And we're going to just show you the other ones. So here, there was another red one, and that one, and then this one. And these were the ones that were picked right when the market was opened. And it added some more as the day went by and said, you know, this one, if it turns, you know, to red and it meets some other little criteria, you could probably make some good money on it. And so the odds are with you, not against you. So what we're going to do is we're going to go back to this first one, and we're going to say, well, what are the things you do to exclude? So here's one of them. This tinted background here, this yellow, orange kind of thing, basically the rules are always the same. Is if, for this strategy, and we have a few strategies, but this is how we start people out, and you get started, like in about a half hour, which is what we're going to do today, you'll know what the basic rules are. So if it breaks to the red side below, because we're looking for red, below this zone, that's probably a good move.
We call it no man's land. If the stock price is in the gold or orange or yellow or whatever you want to call it, that's like no man's land. You're going to get sniped or you're going to step on a bomb, get out of there. In other words, don't trade. Now, as Alan just said, when it goes below, then we're very interested. And you can see it kind of cheated around 12:45 and snuck below and then went back up. So it was testing it.
Mm-hmm.
And that's the thing you have to watch too, because it's always going to be going up and down. There's never been a day where, unless they shut the exchange down, where it stayed the same all day and didn't change, right? So right now we're looking at that and we're going, okay, it went below there, but it was testing certain things.
Yes, and so like I said, there's only a few rules. One of them is you don't trade during lunchtime.
Oh yeah, right.
So it's like you don't even have to guess. It's like, well, you know, no, just don't bother. And there's times when there are great trades during lunch, but this is about odds in your favor, not against you. So,
quick question, guys. So
yeah.
if I'm looking over on the sidebar and I see a bunch of bold R's and red,
yep,
I'm specifically looking for red moves, correct?
That's correct.
Gotcha.
Yep.
Yep.
And if there was a green one that was good, we'd talk about that one too. I'm glad this is for today. I'm glad there was a green one in there because we'll talk about that as well. But we're going to cover the basics first, and then we're going to move to the, you know, how do you deal with little odd ones. So the basics are you want to trade below the line, this zone, and of course for the red typed stocks, you want to catch a fresh move. That's what happens here. That's what that tint in the background does. It says, you know what? This thing looks like it's getting ready to trend. Now, it's got a lot of math in there, and it's not a human being, so it's not as dynamic as we are. So there's a couple exceptions in there, but I'm going to cover that with you. So, but the general principle is that if you've got the tint on the background, that's probably a trend. If the second candle, that's that little guy right here behind that taller one, is 5 cents below the first one, like, see this one, I'm hovering over that, and I don't know if you can read it on your screen, but it says L. That means the low price was 98.16. Now this is a stock that doesn't move huge dollars. I'll just move it there again. You can see that little box. So if this one breaks 5 cents below, and it did, it went to 98.10. So that's where beside there it says O, C, H, L, R. R is the range, V is the volume, and you got the time at the top. Anyway, so if it's 5 cents below the low of that previous first candle, it's pretty good to get in. So I'm gonna, just for entertainment purposes, because we're covering the rules, but we also go like, well, why would you trade? What's this trading thing about? We're gonna go back to, and you can see the times in there. That's an update, Scott, just so you know. That's one of the improvements we've made recently. I'm going to back up a bit, and right, okay, I'm going to, yeah, we'll call it right there. It's about the right price. I'm going to buy a put. There's two types of contracts. One's called a call, and the other one's called a put. Put is for making money on the way down. We're going to say we bought that. And so it puts a little marker right there. I'll hide the time controller for now. So it puts this marker on there and tells us that we bought it at a certain price, 98.11. So I'm going to move forward a bunch, and what you can see is it says 11% profit already.
So just in a couple minutes, we've made 11%. So if your goal was to only make 11% every day on one trade, now would be the time to get out because you're over that.
Mm-hmm. So if you know it's an exceptionally strong stock or day, and we've got clues for that, you can stay in a move longer. So we've got it broken down to pretty high precision. So if you're getting paid 10%, sell half or 2/3 or all of it if you want, and take your money. It's about paychecks. You want to get paid. And if you want to leave some of it on the table for the bigger, less common runs, you can. And you know, get out if it's just break even and it's not turning out, then just throw it away and forget about it. And if it goes your way, great. So let's just see how this thing turned out. We've got these exit rules that we'll tell you in detail. But if I just go to like the most basic exit rule we have, which is that if it gets white on the background, and you get that X happening right there, that's at one of the exit points. So here you would have made 39% on your money. And you go, well, what's 39%? Well, if your account, you put $1,000 in there, that's $390, which is you know, good pay. And if you put more money, you just get more money. That's how the stock market works. You don't have to be stuck with what your boss or somebody else thinks you're worth. It's really how much money you throw down and how well you manage your profits. That's what controls your income. So that's one of the exits, and we can cover all the other exit rules and things like that. But the point is, if you would have got out at 10%, you would have got paid, and you can go trade another day and make another 10% again and again. So we talk about how this is a choice for you. You don't have to go with the 10%. We just tell you, hey, you know, the 10% thing works. If you want to use it, you can. So I've got some other little markers and lines and all that stuff on there, but I'm just going to, and that's a different kind of exit. So we'll cover that later perhaps if we have time today. But that's generally the rules. So you're looking for red on red. You're hoping that the market is red at this time. So the market is red. The stock is red, meaning this marker over here. The signal is red. You're getting in on a fresh trade. It should have some strength to it, and that's where it's got the slope. Let me just get rid of those other markers. That's that dark blue slope line. It's got that going on, and this is how you can change all the colors and do all that stuff. I'll just get it out of the way and just get rid of those guys. So, yeah, there we go. So either it's got good slope going down, that's why that line is heavy and solid instead of like it's a dashed line up here, or you've got exceptional volume happening. That's what this little marker histogram on the bottom is. This is not just volume, it's excessive, meaning that's a good thing for us, that there's great volume today, at least at this time for this stock. And if you've got both, that's even better. That means your odds of it being a good move are great.
We actually have 4 things going on here. You've got the red paint, you're under no man's land, you're under the blue line, the slope. The excess volume means is we know what the average normal volume is for this stock going back 5 years at this time, and the program says, whoa, there's a lot more stock, which means there's a lot more interest. Here,
this is the statistics, not to cut you off, but we've got this. We make all the statistics available to you, so you can see. Wow, look at this is a classic day. The volume's high up here, and the movements like this, and we'll explain all that if you need it. But you don't need it. It's just like the computer's doing this for you.
Yeah.
Go ahead.
Yeah. So you're getting a little extra volume at that time, and of course you've got excess volume throughout the day, which is sort of one of the things we look for in terms of, is there an opportunity today for a long, extended, nice move like this one? This is a really good move. But again, if you go back to the previous red paint, you'll see, you know, it could have been very easy for you to say, well, this is one I should jump in, and the next thing you know, you're either going to lose a little bit or you're going to get out at break even, right? So there can be false starts, and that's one of the dangers of options, right?
And there are some really great trades in the morning. You can see here in the first 10 minutes, and I'm going to go there just so you have an idea. I'm going to, because we know stuff, we're just going to, just for entertainment, this is, you can make some great money. Oh yeah, that's right, it won't let me do that. I can do that. We'll do that on another stock. I'll explain why, but you're not supposed to do a trade in front of a trade here. Won't let you. This is trying to teach you how to be an honest, because the market won't let you cheat. So you can't put a trade in front of another trade. But I'll show it to you on another stock. So let's go look at one of the other ones that it picked in the morning. So this one's Solar City. Now, you already know the rules. One of them is don't trade during lunchtime, New York time. So there it is. It's like there was a fresh signal. It actually did not beat the low of the previous by 5 cents, so it's not a good trade. Whereas this one, same thing. You've got slope. It beat it, and it doesn't have the volume, but at least it's got the strong slope. Is that making sense?
Yeah, how often do you use the 5 cents indicator?
All the time.
All the time.
Even when it's a $200 whatever or $1,000 stock and it moves, I still use the 5 cents as my break even. And the reason I use that is because I'm the guy that looks at thousands and thousands of charts, and I have a computer that runs all kinds of stuff like experiments for me. And 5 cents is pretty magical, and it works on SPY, which, huge, massive volume, but only moves about $1 a day within a range of $1. And if we go to like Google or something like that, it works on that too. And the reason it works that way is because on the other side of the table out there, you've got human beings, mostly, that either program their computer to do whatever for some special fund. But usually you've got a trader sitting there that says, hey, you know what? If it breaks this price, I have to cover my position, or I'm going to jump in to get involved. And so they're moving the stock around, and we don't move the stock at all. We don't affect the stock market at all. We're just riding along. So whatever these guys are doing, we're following along with what they do to make a profit on it. We're just riding along. That's all we do. And
Cool.
so based on their patterns of what they do, we go, okay, great. Now, there's a thing about getting into old moves and a lot of other training that we give you. Just it's not at all complicated. It's all easy stuff. It's kind of like, well, you know, when you first start anything, it's like, whoa, it seems like there's a lot of stuff here. But, you know, after a week, say, of playing around in your spare time, you'll be really good at it, especially now with the system being broken down into this one strategy as a starting point, because you already know half of the strategy. You really do know half the strategy. Don't trade during lunch. Look for slope or excessive volume, red on red, and you know that, and the 5 cents. You already know half.
Awesome.
So, hey,
And
Scott?
that 5 cents, that works for the green as well, correct?
Yeah,
Just
that's right.
there's
So
a
5 cents
5 cent mark.
above. Yeah, and we can go pick a day where the market's going up. But what we'll do is let's go look at this green one. Now, here's the point. You already know that the whole market's going red today. But we're not going to say anything about anything. We're just going to go check our rules. Here, did I have a fresh trade that started above the line? It started below the line. It's on the wrong side. It had volume and slope, but it was on the wrong side of the line. The second,
That's the mag line?
yeah, the mag line, that's right. So this baby right here started out on the wrong side. I don't want it. When it started, and over here, it wasn't a fresh trade. It was the third candle here. And it's like, that's not a trade.
Gotcha.
So, but if the market was good, people would probably be buying this stock, because that's how that works, and it's been working that way for 100 years. So there's a lot of statistics that we have, and I probably have some of the oldest data you can get your hands on. I'll just give you the 10-second on that. This is Dow data going back to 1900, 1900. So if you wanted to know how the stock market moved on a weekly basis in 1907, what happened on June 28th, 1907, it was a good week, and you don't need to look at all this stuff. What I'm telling you is, I've done all that. You don't need to. But so, you know, looking at lots and lots and lots of data, and you know, having people try out the system in our early stages, and getting feedback and making things better, you're in the stage of it's all done. It's actually being made easier and easier now. And so that's why these rules exist, is because you're not fighting trading habits, or fighting not your trading habits, but I mean other people that have been buying and selling the stock market for 150 years. There's companies that have, you know, Goldman Sachs, I don't know how old they are, but, you know, Morgan has been around for, you know, 100 some years. They have a system. You don't affect the price of the market when you buy an option. You're riding along. So you're not trying to tell them how to trade. You're watching how they trade, and that's what the rules are based on. Is you just say, great, they're selling the market hard. Okay, what's a good red stock? And that's pre-picked for you. So one of the other things that we look at for picking the better, when you've got a lot of ones to choose from, what do? Well, if it's the middle of the day, what we're looking for as the better trades is on this bottom third, and you can see there's boxes around with the dates. And you can use, it'll use your date format. This is just the one I use. So September 26, 2014. That's what happened inside that day, is inside that rectangle. So you got 7 previous trading days sitting here, and you can see the same tint colors happening. It's saying that this thing's a great stock, so you can see that this thing would have been a phenomenal stock to trade in the morning. So we'll go look at that one, just to give you an idea how much money you can make in the first half hour. But we don't recommend that you start trading the first half hour of the day as somebody who's getting started. Just learn the flow, practice in the replay, and once you've got your consistency, and that's what this little trading tool is all for, and there's a summary that comes along. You just click on that thing and it brings up the summary. So your coach, who I know is a friend of yours, he knows all of this stuff, and if he doesn't, we'll let you know for sure. But he knows all these things and how to click on things and what you get. But if I will go trade this thing in the morning just to give you an idea of how fast the market can make you money. It's high speed, but you have to act faster, and you have to trade a little bit differently than the rest of the day after 10 o'clock.
Okay, Alan, I want to jump in just for a second and reinforce this. There's two parts to trading. One is being really practiced. It's like the pro baseball player, pro football player. I mean, they're practicing all the time to make sure when they get into a certain situation, they do the right thing. And in the beginning, you're going to buy a put or sell a put when you meant to buy a call or sell a call. And there's all these little things that are gonna happen. What we want to make sure doesn't happen is that you get into a bad trade first, which is why we have this buy sell. The whole idea is the market's going to be moving at a certain speed. You can actually go faster so that when it actually goes to its own speed, it's a little bit boring because it's slow. Or you can go at any speed that you want, and then you say, okay, looks like this is good. I'm going to go buy now, whether it's a call or a put. Looks like I should be getting out. Going to get out now, and it's going to tell you right away. I made 10%. I lost 10%. I made 80%. I lost 80%, and you're going to know exactly. So it gives you the feedback, and that's really, really important. And then once you're good at this part of it, then you start doing the same thing, because I believe we have these same buttons in the live program, right, Alan?
It's coming, but the only reason we haven't is we didn't want to confuse people.
Okay.
Yeah, we'll get to that another point. But
all right. So then the other side of this whole thing is whatever the platform is that you use to trade real live money with, which would be someone like Interactive Brokers or your bank or whoever it is that you decide. And that's a whole other series of skills that you're going to have to be comfortable with, right? So we want to make sure, first of all, you're really comfortable with the charts, you're really comfortable picking winners, and by giving you the buy and sell is very new. We didn't have it 6 or I don't even know if we had it 3 months ago, but we really wanted to give people that feedback of like, wow, first of all, it's great. Well, I made 10%. Wow, I made 20%, everything else. But also at the end of the week, you'll say, wow, like I made a bunch of money and I lost a little bit of money here. So you have a realistic expectation of what you're going to be doing in the real world, because this is all set up exactly the same as the real world. You're going to be a little bit more nervous when you start trading your own money. That's a normal transition that occurs, but you're going to be aware of that. So like, you don't put 100% on a trade and then run it to zero. It's like put a little bit in and just sort of dip your toe in and try and see how it goes. And then when you see one that like, oh my goodness, this is a great move, because you'll be able to feel it in your bones after you've done this for a month.
Oh yeah, I was pretty excited today because it's like, this is going to be a great day.
Yeah. And then there are also days where it's just like, it's like when you go fishing and the fish aren't around, right? Or you want to go surfing and there's no surf. It's just like, got to go to the beach today or sit in the sun or read a book or something because nothing is happening. That happens too. But we want to make sure that you have all of the tools you need.
Yep, absolutely. So let me finish one point that I started on, and then we'll go look at just that one trade. So you know about trading below the area. Red on red is what you're looking for. Red market, red signal on a red stock. So the other thing is, the better stocks, statistically speaking, so you don't get these like little jittery type of moves, are the ones that are on this bottom chart here are near the bottom of that range already. They're already, people don't like this stock and they're dumping it. Or it'll be, if the green side, it's on the top side and going higher. So let's go just thumb through here and just see like this one here. Let me hide this guy for now. the previous low was here. That line is right there. I hope that's visible. But right there it says previous low. Well, previous low would be that day there. What I'm looking for is something that breaks all the days. And in this case, it's the 20-day low is right down here. That's the 20-day. There's a 7-day low, which would be right at the bottom of this candle, which is 1142. When it breaks that kind of price, 1142, if it starts near there during the day and starts running down, those are the better trades. So let's go see if we've got one here that's like right here, like this one here is at the bottom of the box of the previous days. So the previous low is also a 52-week low. So this is the low for the year. It could be low for who knows how far back. These are the better runners. If this guy runs, it's probably going to run. This is the kind of thing that you might hold all day. So see right here where it broke? That's the line here. That's the 52-week low. That's also yesterday's low. So see, it's running down. It's still in the zone. It's down here. And there's some things to know about market behavior, and we teach you all that too, is that there's places where things like to bounce. The put-only zone, a 52-week low or high. We've got some other target prices. We give you all that stuff, and it's been like heavily tested over years. It works. So here we're going to get a bounce point, so you can make some short money. If you wanted to hang on, you could, but you'll notice that there's no volume here, but you did have slope, right? So it comes to the low, and when it comes to a previous low like that, that's where the other investors out there say, wow, it's cheap. I'm going to go buy it. And that's what they do. And so you get this, right? You get this stuff going on.
It's like bouncing a ball on a floor.
Exactly. Now, I could teach all kinds of stuff about patterns and all that stuff. You don't need to know all that. This is like the composite of what we're doing. You get this, you got a bounce point. It told you to get out using the basic exits. And you say, well, okay, great. We knew it wasn't a great move here. You had one out of two things. It was coming to a resistance point or a support point. It tried it again. Now you'll notice this one didn't go 5 cents below that one. I don't know if you can see that because it's pretty small, but it's 66 was the low here, and 65, it was actually higher than that one, not lower. So here's a fresh trade, very skinny, and again, I don't think it didn't break it by 5 cents. So, and you got no slope there, it's dashed, and you have no volume. Yeah, you could make some money. I don't care about could. I want high probability, lower number of trades where I'm not going 50-50 odds. So I will actually trade fewer days in a month than other people because it's like, you know what? I don't care. I just want the great trades. And you can pick more trades and get better at it or fewer trades. But this one here is pretty phenomenal because it's lunchtime and you go, I don't trade during lunch. So you know what? I would have missed that. Somebody else might have traded that. But I'm just going to talk about the shape of the move, not the time of day. So I'm not saying you're going to go buy it, but see how this thing just fell off. That's because down here there's no support price. There's nobody out there that wants to buy it in this range. That's why the stock falls. You see, this is the stuff behind the charts. Nobody wants to buy it. See here, there are people buying it. You can see the price was coming back up because, oh, it's cheap. And then there's other people going, I'm going to dump it. It's already at the 52-week low. It's a bad stock. And whatever's going on with the company, I don't need to know. In fact, it actually adds to people's confusion to know what's going on with the company. It's better just to look at what the chart's doing because the chart's showing you what's the current price and where the direction's going. The color and the tint and all that kind of stuff. See, a lot of things were in your favor on this chart. The only thing I didn't like is lunch, but there's another one, and that's that this is too far away from that zone up there. Quite often when you're that far away, it may kick up back here and then bounce down, or it could just go the other way. So you want it tighter, not super tight, but tighter than this. It's a visual thing, and not lunchtime. and that's you know like 80% of the rules now. So red on red for red day, red stock, red moment. You got the slope, no volume down there, but you got slope, right? So it's not as good. But you're looking for things down here. So this is not the best stock. Well, I'm only trading one stock. So if this one's not my best, next. That's what I do, is like next. So let's go look at the next one on the
Well,
list.
and I just want to make one other point, if we can just go back to that last stock, and that is that the other thing that's really interesting about this one is, and you said it a couple times, I just want to reinforce it, is you were under a 52-week low, which basically means it's free fall time. It can be free fall time. It also could go back up. I mean, one of two things: whether it's going to go up or going to go down. But you're in a kind of a free fall time, which means that like nobody's really thought it's going to be this low for for a year. It's never been this low, and now all of a sudden it has been, right? So that's another thing, and that's why we look at those 25-day lows, 20-day lows, and even the 52-week low when there's nothing to the left that's any reason for resistance or support, then it can just collapse. And the same going the other way. Everything we say for the red is equally true for the green. It's just the opposite. When you're at a 52-week high and it breaks that high, everybody's ecstatic. And what do they do when they're ecstatic? Well, they buy more. Stupid thing to do, because you're buying high and it'll drop and you'll sell low, but lose your money. But we're happy about it because it just means there's a chance that we can ride this thing further because everyone is happy about it. Everyone's sad about it. It's going to drop like a rock, and this is a great example of that.
Exactly. And here's the daily chart. So every one of these candles is a day. So nobody's showing this stock any love. There's these little bubbles here and there, but there ain't no love for this.
That's great.
Yeah, and we've got weekly charts and all this other stuff, but I don't care about that. It's too far away. So let's go on to this guy for a moment, because I only want one good trade a day, 0 or 1 good trades a day. And we start you out that way because human beings have some habits, because they're not trained into being professional, profit-making traders. They have habits else, or they just what they think, and that's okay. But here we're giving you, no, this is what you want to do because it works. So here, this stock, you can see here at the bottom, is below the previous bunch of days that you can see over here. So it looks like it's prone to fall. And it fell very nicely. But you see the previous low is right here. It's right there at the starting gate. So that's a better one for catching a run down. Now, if it doesn't do what I want it to, I'm not going to think and hope and pray that it does what I want it to do. If it doesn't look great, I'll walk away and go look for one that does. Because there's, even on this list, there's like, 10 stocks. I don't need to pick, the mediocre one. I just want the best one. And if I don't see a great trade, I just won't take it. And that means I'm going to make a profit instead of lose money. So here, you've got this blue star, which we'll explain some other day. That marks the stock as saying this thing could really move today. That little marker there. And so it did. It ran down, but that was during lunchtime. So I go, well, too bad. And then at 1:10, just before 1:10, there was a slope, no volume, but the slope was there. And it's like, well, did I get my 5 cents below? I didn't. So you don't have to follow my rule on that. And it was a great move. But what was the setup for this stock is this stuff down here. This stuff down here said, hey, if this thing goes red, keep an eye on it. And it beat the previous low. That was okay. But I'm looking for it to beat this low over here, which is a 7-day or 20-day low. In this case, it's both a 7 and a 20. So that low price there looks like $100. So when it breaks that $100 and some cents, see right there the 20-day break, that's a good time to get in. But you see here, it wasn't a fresh trade at that point. It had some volume and had some slope, but it wasn't a fresh trade. So in the beginning, I want you just to have the best probable of stocks. When you get comfortable with it, like Steve, and Scott, and a bunch of others, it's like, well, you know what? I would get into that trade, and I would do this and I would do that. And if it, I'll go play this one because it's in a perfect spot. It's at that break point right there, that 20-day. You know, I might just get in and go ride that. You see, you have all the tools to prove to yourself that you can adjust it to your style. And we actually want you to adjust your style. And the reason is very simple. Not everybody's the same. It just isn't that way. Like when I go look in the fridge for, you know, something in the fridge, I don't see it. And my honey will say it's right there, right in front of me. And she's right. It's right there, right in front of me, but I didn't see it. There's nothing wrong with me. It's just my personality, the way I am. It's like, oh, and then there's things that she doesn't see that I see in life. And so it's like, it's not about trying to force you into our stuff. It's like, listen, here's the basic tools. There's a whole lot more here that you can use, and Steve will give you some guidance on that. You know, some of the other bits. Like there's some features that we don't generally tell people about until they're, you know, comfortable with it, because listen, just get the basics down. When you got the basics down, there's all these other things that you can mix into your trading rules to have something that works really well for you. So like the fridge thing, you find it right away. Oh, I see that one. So this would have not been per our simple strategy that is, you know, a starting point. This didn't fit the rules. So you go, okay, you wouldn't have got that one. And so, you know, at some point you may say, well, are there any trades? Yes, there are, and there are lots of them. But it's again about getting good. This one is a good trade right here for the beginning system. It's below the zone. It's a fresh trade. It went down. Let's just go put the price thing on here. Let's go set the time. I'm going to move the time back to, here's how we move the time. You can do it lots of different ways, but I'm just going to take the slider here and say it's 10:03 or whatever, something like that. So here, and I'm going to make it 5-minute candles so everything looks consistent. So look at that, broke the previous low. Look at the 7-day down here. It's at the bottom. This could be a really good runner.
The stock market, if you just show them up at the top, is also generally moving down. So
Yeah.
if the stock market or the basket of stocks that we're following are moving in the same direction as what we want to do a trade in on an individual stock, that's another, you know, it's like you've got the tide coming in and you've got the waves coming in, a little bit more of a push.
Mm-hmm. Yeah, and it's a great point. And again, it's the same stuff. Is the market going your way? Do you have a signal? Is it red for you today? How are you sitting at the bottom? Yes, this looks great. And I would be tempted, and I have done such things, is I would go buy right there. I don't need to wait for the second candle sometimes. Let's just say we did. I'm going to just move forward. So here it is. It's below the other one by 9 cents. So I'm going to go get our little magic tool that says I bought it. And now we're going to go forward here. Yeah, you're up 5% in 1 minute. I'm going to go forward another minute, 8%. Okay, move back a bit. You're at 4%, 8%, 21%. And you go, okay. Now I set
Sell
it up.
half, lock in some profit.
Lock in some profit. Now what I do is I give you lots of good stuff about transitioning from practice environment to the live environment. Lots of good things to tell you, and we're making videos to help you with that too. But let's move forward and just say, okay, well, I stayed in because I still have a red background. Well, I'm up 5%, 1%. I'm down a little bit. I stayed in. Ouch. I stayed in.
And you'll see it went back up to the support, or to now it's the resistance, right? That
Yeah, the mag line.
The mag line there, right?
Yeah, so you're back into profit. I have a few things I tell people. You know, if you start losing money, like a little bit, like I say, if you're losing 10%, I'd say get out. We're waiting. You know, why is this person hanging in? I don't know. But you see, I would have already been gone, paid, finished at 10%. So I'm going to keep hanging on and just to show you why. we say get out. So I'm going to move forward quickly now, so you can see. Well, I would have hung on all day and I would have made a fortune because I knew it was going to go this way. Really? You knew? How did you know? Like, you're not throwing down. There's $250 billion every day that gets exchanged on the stock market. Even if you did buy $1,000 worth of shares, you're no impact. And we're not buying the shares; we're buying the option, which is the the ride behind kind of thing. So this is why you'll get paid 10% a lot of times. When people start looking for 50%, yeah, you're going to give it to me. Really? Why would the market give it to you? It doesn't even hear you. You don't trade anything that it would affect the stock price. You're just buying the options.
So to use a baseball analogy, it's kind of like every once in a while the pitcher's going to give you the home run pitch that you can knock out of the ballpark, but when they're hitting 300, that means 7 out of 10 times they're striking out. They're not doing anything. And how many times out of those 3 remaining hits do they actually have the home run? Not so often. So we say get on first, and then get on second, get on third, then get home, and that's the 10%. And you know what? You'll recognize the home run ball when it comes, and then you just jump on that and say thank you very much. And that's my 30, 40, or 50% half hour, and I'm really delighted. And I got it because I was in the game. I didn't get it because it's there every day, every week. It's not.
Yep. Yeah. So there's lots of tools and cool things, and we'll give you all that. But there's your basic rules. There's not a lot more to know on the basic system of trading. And but the most important is mindset. Is I want to be picky because I want to get paid.
Yeah.
And you can, please go ahead and modify the rules to suit you. And Steve's going to give you lots of good help. He is successful at trading, so he knows something. And you'll be tempted because if you're breathing air, you'll be tempted. It's to go on some other path. And that's okay. You may end up paying a bit of money for that, but you might help develop a strategy. Fine tune something for you. That's okay. But that's
what Alan is really trying to say is you're going to decide that you know what to do. And we don't, and then you're going to lose about a couple $3,000, if not more, and then you're going to come and say, I lost money last week, and then we're going to get on another one of these, and we're going to say, well, what did you do? Yep. And if you're honest, because we had this experience with Steve, he'll say, well, didn't follow the rules, right? So let's go over them again, and try this week, just follow the rules, and then it's like, I'm making money again. Thanks, guys.
Yeah, it's fabulous.
And it's normal. It's just absolutely normal. That's the important thing to remember because we all do it. We all have self-sabotaging behaviors because we're used to a certain level, whether it's of income or girlfriend or wife or food, weight, all these things we're used to, and we tend to bounce back to those levels. So that's why when someone loses 20 pounds, 6 months later they put it back on. That's normal behavior. Doesn't mean we have to be normal. We want to be very much not normal, and that's why we look at doing these things. Normal would be working at 7-Eleven or the gas station, right? And doing what some guy tells us to do we don't want to do. So the thing is don't beat yourself up about any of this stuff. Just say, yeah, okay, they told me this was going to happen, and that's fine. So now we just go back to the basics. It's just the same as any sport, right? The team is losing. Like, what the coach always says? We just got to get back to the basics, Throw the football, catch the football, run the football. We're just not doing it. And then away they go. So, this is the same.
Well, I think that's about it for me. So unless you have some questions or anybody's got a comment.
Yeah, I think you've done a really good job kind of clearing things up for me and making things really simple. Um, do you specifically have any sort of guidelines to, or an acronym? I know Steve has his mod PVT
Yep.
BT. Uh, I was
Well,
curious if you guys had any of your own
yep,
little
we
check
do.
marks that you check to make sure you're getting into a good trade.
Yeah, we do, and it's actually laid out in a video. We're going to do a lot more videos. It just takes time to get them built because we do a high quality video, so it takes time. So this one's called "I'm the Boss." It's very similar to what Steve does in his strategy, and that video is right there in the basic program. And I'll give you a link for it so that you can actually watch it. But it goes through the points that we went through today. So I'm going to give you the narrative because this is just the summary video. It's not the training video. So it says I'm ready, which is like, you're not being interrupted by the bathroom, cell phones, and all, checking emails. It's like I'm focused today. What's the market? Is it a red day? Is it a weak day? And we didn't cover that, but that's a good topic to do later.
Very
What's the
bold.
daily direction? So that we looked at already. Remember the bottom part? The bottom part is telling you the daily direction, but it's pre-marked with those reds and green, big R's and G's. Is it a breakout? Well, we looked at that. We want a breakout of the lows or the highs, or of a range, which is that middle. Don't be in that range. You want to be below it, and it starts. There's an opportunity, so you're not going to bump into things. We'll give you more details of what that means. A strong move is either volume or slope, and both is better. Signal is the signal color, and that includes breaking the 5 cents. And if you have all that, it's probably a good trade, and you've seen it here. And the beauty is you've got 1,000, you got 5 years of trades, specific stocks, and you can go minute by minute if you want. And you'll be able to see all the different trades on all the different days, good days, bad days. And we're going to be building a list of what we call missions so that you can go to a very specific day and then say, hey, I want you to look at this behavior on this day just so that you know some of the things that go on with the stock market. And, it just shortens up your learning curve.
Mm-hmm. Awesome.
But you actually don't even need any of that. All you need to do is just pick random days and go practice those rules that you got today. And if you can practice that, come back with some questions. We'll cover them. And we're going to make, like I say, a whole bunch of videos. Now, we've got in here, well, how do I pick a random day? Well, here, there's a thing called game mode. This is to test your skill. So instead of clicking on a day and hitting go, you hit game. So that's what I'm going to do. It picks a day. It doesn't tell you what day it is. And it starts playing the day at real-life market speed. So that means 10 seconds here is 10 seconds here. And the only thing about this, other than it doesn't tell you the day on purpose, is it doesn't let you go backward in time. So like the controller, you'll notice the go back buttons are missing until you get to the end of the day. Now if you want, and this is great for training, is you can say, hey, you go pick random days so that I can just snoop around. Then you can say, okay, go to the end of the day, which I did. You can go forward, you can't go back. And you say, well, I don't know if I believe this guy about the rules. And it's like, well, let's go look. Well, here we are. You're in the risk zone. It's not a fresh move. It wasn't good. It's lunchtime. Wasn't good. How about this one? Skinny candles means skinny volume. Wasn't great. Well, what's also interesting about this stock is it's telling you should be looking for the green side. Why are you looking at the red? It's not a trade. Over here, we've got green, but it starts on the inside. Doesn't fit the rules. I don't even know what day this is, and it does tell you at the end when you pick it. But it's like, so here, this one is on that list. That other one was Apple, was not on the list. And it's like, this one has a possibility. We got slope, it's a fat candle, it's got volume. If it beats it, there's your 10% right there in that one candle in 3 minutes or less. Boom, you got paid. You want to hang
So
around.
that's another reason why you got to watch the greed part, right? Because it'd be like, oh
Yeah.
yeah, this thing is going, it's going great. Look at the excess volume, and the next thing you know, you're back down to zero.
So here's lunchtime, and it didn't break the 5 cents. Didn't turn out. What a surprise. So, you're going to miss, and this is what Scott's also getting at as part of that is like, you're going to see, because people do this, they're going to see, wow, there was this awesome trade last week on this one stock, and it happened at lunchtime, and it was supposed to be a green stock, but it went red like phenomenal. And then what they do is they throw away all the rules to catch that one trade. It's very much like sitting in the bar for 5 years waiting for that one brunette that was beautiful to
That
come
you saw
back.
the first day, and you were sure she's going to come back.
She was a stewardess, and she moved on with another airline. She was just flying through town. She ain't coming back. But you see, this is the type of diligence. This is about a system. You're building a business here. You want repeatable success. It's not about luck and random. And I saw this really great one, and it's like, no. It's all about repeatable success. And you're going to get tempted by rules. You see, like here, well, you see, it didn't break the 5 cent, and it did move up, and it's like, yes, that's true, it did, but it wasn't the best trade. So that means your odds of success got diminished, which means your odds of a loss increased. You might still make money at the end of the month, but you might have given up a bit of money by taking weak trades. Yes, there's very few, awesome, perfect trades in a day. I only need one. So when you get good and you learn the background of all these other things, you'll know that, oh yeah, for me, I'm willing to ride the rules a little bit differently because I've seen enough of it that I know. So that's it. There's like so many things here and that are available to you, but you don't need to figure any of it out. You can just follow the rules. You've got a great coach. Steve really does know what's going on. Now, you see, when somebody teaches you and they're not making money, they shouldn't be your teacher. Steve's making money, so and you know him well. So, and we'll top up more videos so that everybody's got access to all of it all the time. But I think you have enough to get going.
Awesome. I have one more question for you guys. What time of days and what windows would you suggest I start trading?
After 10 New York time would be a good time to get started because it's the easiest time to learn.
Okay.
Anywhere after 10, skipping lunch up until, you don't get in at 3:30. 3:30 is like you should be out of everything around that time. Yes, there's some people out there making great money in the last 10 minutes of the day. That's not what we're trying to teach you because that stuff's pretty random. And those guys don't have repeatable success generally. A few of them do. But, you're supposed to just go with the rules, get good at learning these things, and then I want you to keep track for yourself, and that's where the tool will help you if you want, is you say, okay, I bought that thing, and then you go to the totaler, and it has there, and you say, this is, you take a copy-paste, Control-C, whatever, copy-paste this to like a Word doc or something like that, and then you just keep throwing them in there, and then after a while you get to see, hey, you know what? I'm getting better, or I'm not getting better. It's like, so what am I missing? And it's very simple that way.
Okay, so what Alan's really talking about is homework for you when you get the program up and running and you're practicing. So you don't have to get up at 4 in the morning or whatever to go to the live day trader and everything else because you've got the replay. So what we really want you to do for the next little while is just use the replay. So you can do it any time, but you're looking for trades at 10 a.m. till noon, and then from 1 till 2:30. Those are the two time periods that you'll, and take an eye and a look at what's happening before 10, and take a look at what happens at noon, and take a look at what happens from 2:30 on, because those are very educational. But we just want you looking for trades between those two periods of time, and then actually make the trades in the replay, you know, buy the call or buy the put and then sell it, and then make a note of how much you made. Because I'll tell you, you'll feel really good and really confident if you make 10 trades and 9 of them are winners, and you got, I don't know, 5 that were 10% and 1 that was 20% and 1 that was 36%. And we know that you're on the way. But if you've got minus 10% on 9 trades and you made 2% on 1, that's a clue that you should contact us or contact Steve and say, you know, I need to rethink some of this stuff because I've obviously missed something. And usually it's just a little tweak and we'll get you on the right path. So either way is fine. But by doing, you know, 10 or 15 trades, which you could do in the night, you know, really, you'll see where you stand, right? And the more you do it, the more this stuff kind of makes sense, and you'll have more specific questions too.
Sounds great. Well,
and it's fun.
We should probably wrap up at this point because pretty soon the brain gets too full.
That's right. Okay, so Blake, you let us know when you get your new computer, and then you got the program, and let us know when you started practice trading, and then we'll go from there.
Awesome. Well, thank you guys for taking some time and teaching me a little bit about the program. I'm really, really excited to get going.
Cool. Well, we're happy to have you on board. And appreciate you too, Steve.
Oh, hey guys. Scott, you look a million times better than last time.
Yes,
yeah, I know.
Oh my God.
Yellow.
Yeah, exactly. You have color on your face. Everything's looking good.
Yeah.
Every time I hear you guys talk about this program, I get motivated. I want to call the place I work at, like right now, and tell them I'm not going to show up anymore.
Don't do that.
As I was telling Blake, that's in this near future, maybe in the next 2 months. So we'll see.
Cool. Yeah, job independence is the first goal, and it's really, really achievable. You know, we're really happy that people are being successful. That's really what drives this program is that we want people to be successful.
Yeah,
we really didn't have to do all this, but it's like, you know what? We live on this planet with the rest of y'all, and it is completely possible that a bunch of good people can make good money.
And it's no fun being the only person on the beach.
Yeah, exactly. So yeah, we're trying to build a community. So Blake, if you're interested, you know, after you've shown yourself success and all that kind of stuff, you know, we do want to have you know, a forum up there and a board and all that kind of thing, and that you can coach the new people, and you know, we help you. You know, we do things for people that are coaches, but the biggest thing is you become a better trader because you're teaching. It's true in any industry. It's like if you want to learn something, just you be the teacher, and all of a sudden, yeah, you know. So
that's right.
So that's it for me. So
cool.
Thanks, Scott.
Awesome,
Thank you
guys.
Good morning.
All right. So we'll see you in a week or two.
Sounds great.
Okay. Bye-bye.
Hey, Scott, real quick.
Yep.
Before we get off.